Today is Monday, May 15th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grain markets this morning, Mark, this past Friday we had some USDA reports. Any surprises in those numbers?
There were two things that really jumped out to me. First, the USDA made no changes this month to either the Argentine corn or soybean production estimates. In corn, production was left unchanged at 37 million metric tons. Most private estimates from South America range from between 32 and 36 million metric tons. So USDA's estimate is still seems a bit high to me. While at the same time, the USDA was aggressive in raising the Brazilian forecast by 5 million metric tons to 130 million metric tons. And in soybeans, USDA, they held their production forecast steady in beans at 27. Many of the private guesses down there are in the range from 21 to 23 million metric tons. So again, the USDA is well above all the others. And the USDA also raised their Brazilian forecast by 1 million metric tons. Second thing that really jumped out was just how aggressive the USDA was in lowering their harvested acreage forecast in the U.S. winter wheat crops. The USDA is forecasting only 67% of this year's winter wheat will be harvested for grain. That's the lowest in over 100 years and also well below the historical average of 80%. This high level of abandonments due to the severe drought that's been set up in the Southern Plains now for months. I'm not shocked with the high level of abandonment, but I'm just surprised at just how early the USDA made this adjustment.
Mark, what do you think that'll do to the wheat prices? Is it being seen in the price activity now?
Yeah, we've seen a surge in wheat prices both on Friday and again here this morning. We've had some rains in the Southern Plains here in recent weeks, but so far it just hasn't transpired over into an improvement in crop conditions. Probably a case of just too little too late. But yeah, we've seen a nice surge in prices in Chicago, largely due to short covering here by the large speculative short position.
Mark, when we look at this week, what will be the key factors driving prices?
Well, with the USDA reports out of the way, we do get a crush report today, and of course, we'll be on alert for additional demand developments. But without a doubt, U.S. weather will be the key driver for agricultural commodity prices. Really for the next several months. Good rains across much of the southern and western growing regions last week likely held plantings back a little bit. But I think longer term, these rains did more benefit as it went a long way in easing some of the drought issues in some of these areas. This week looks significantly warmer and drier, particularly across the northern plains. That's the one area where plantings have been stalled. So hopefully farmers in this region can get back on track.
Lastly, Mark, how about an update on the fund position, the managed money position as it applies to the grain markets?
Not much change this past week from the index funds. In the money managers, in recent weeks, they flipped their net position in the ag space over to a short position, and that's the first time since August of 2020 we've seen this. We continue to see a sizable short position in Chicago wheat and in corn, and a bit of a short position in soybean oil, while their long positions in soybeans and meal, they have been pared back quite a bit. So net short right now, but not a big position either way.
Alan, the debt ceiling has been widely talked about the past few weeks. How is the debt ceiling affecting stock index futures?
Well, the debt ceiling impasse has been a major headwind for stock index futures, limiting gains. And I think this will probably remain the case for quite some time until there is some resolution. So any gains will probably not follow through in the indices while this issue is at the forefront. It could be that there may be some stopgap measures that could buy more time. Right now, traders are looking at June 1st as the critical day. But in the past, there always has been a resolution. Sometimes it's gone right to the last minute. Sometimes it's been after an extension. But either way, there will be a resolution. And once there is one, I think then traders will probably start to focus on Fed policy again.
Sticking with the stock index futures for a moment, Alan, what are the major support and resistance levels on the charts as it applies to the June S&P 500?
Okay, well, first of all, we have resistance at the recent high at 4206 and support coming in at the 4060, 4062 area. So it's a rather broad trading range. And once again, we have this debt ceiling situation limiting gains. However, talk that there may be some accommodation later this year from the Fed being supportive. So some diametrically opposed fundamentals that will probably keep us in this range for a while.
That's on the financial markets this week. What are the most important economic reports and events scheduled?
Okay, so on Tuesday, we'll have April retail sales. They're expected to be up 0.7%. Also on Tuesday, May housing market index anticipated to be 45. Then on Wednesday, we'll have the April housing starts guessed at 1.405 million and building permits at 1.43 million. For some reason, traders tend to focus more on starts than permits, but it's actually permits that are more important since they are a leading indicator. First of all, you have to have a permit to build a house. So focus on permits. Thursday, we'll have the April leading indicators guessed at down 0.6%. And then Friday, we'll have Fed Chair Powell at 10 o'clock Central Time speaking on at a panel discussion in Washington.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.